The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And very interesting. This time yesterday, you remember we were down 160 or something, 170. Then we went down to 190. Do you realize that today we're up 199 in the Dow at 16,367? Now, one of the phenomena that we've experienced, certainly I've experienced, for many, many years, is that within the Chapman wave methodology, regardless of what the news is, regardless of what, just regardless, if you get a peak C in the Chapman wave, especially when you are going to all-time highs or recovery highs, there is just a 90-something% chance that you will still get that leg D. And that's where you got to be somewhat cautious. So what are we looking at here? Yesterday, this time, I was discussing that the E-minis had gone down enough to say with conviction that there was a pretty good chance that we were looking at a peak C in the E-minis, and that by all intents and purposes, the way I calculate these things, the same thing was true of the Qs, the QQQ Trust Series, had gone to a peak C. Now, how do I do that? From the low bar of 83.74 made on the 5th of February, that's the lowest, most identifiable low bar, and all you do is you count each successively higher peak, and these are called floating letters. Uppercase A on the 6th of February gets moved to a floating A high on the 7th at 86.99, and it keeps doing that until where? Until on the 18th at 90.04, the subsequent session on the 19th has a lower high. That's a lower high bar. The actual bar itself high, 90.04 and 89.91 in the Qs. That makes peak A. The moment you break 90.04 by 1 penny, you go to what? You go to leg B. And then leg B by 1 penny, you go to leg C. So you get to 90.96. At that stage, the pullback was very sharp. But what I said is that the MACD was still very strong, the moving average, convergence, divergence. And I do intend to have a class on that one of these evenings in March. And the stochastic was still strong up in the 80. At that point, I think it was 86%. So I said, there's a good chance that we will make 90.97 for a leg D. Well, the high today is 90.91. We've missed it by 7 cents so far. Days young. And the weekly chart will immediately extend leg D if that was to occur. A 226 high question in the den, 226. The 226 high, yes, the 226 high was 90.47, but the very next bar was 90.53 on the 27th, and then 90.96 on the 28th, so there were successively higher peaks. So it's a floating letter, and it floats until it makes a peak C, confirmed yesterday on the pullback. Hope that clears that up. So I'm anticipating that we will get a leg D. That's number one in the Qs. We have already, as remarkable as it might seem from yesterday at this time, especially with the Roman candle, which will be filled at some point, but doesn't have to be very soon, that candle from yesterday, Chapman Wave Roman candle, we have started leg D to the upside. And it is relentless for the bears. Even now, the S&Ps, let me just run the numbers. The Dow is up 199 at 16,367. The S&P is up 24 at 1870. Let me just type in D here. Whoops, capital D, uppercase D, right there. Okay, then you've got the composite index up 73 at 43.50. You've got gold, which was soaring 20-something points yesterday at this time. Now down 13. It's only down 13, less than half. To me, that says gold is still in play. Now, if you're talking Putin, you cannot for 1 second think that the whole party's over. It doesn't work that way. Not with Putin. So let's go on, and then I'll talk about the scenario that I'm looking at. You've got silver down 25 cents at 21.19. Platinum's up again, up 5 at 14.63. Copper just had a nice spring back. It's up 3.25 at 3.25. Crude oil is down because yesterday it was up under the fear of the Putin crisis. 103.35 down, $1.50. Bonds are down 26.30 seconds, down at 134.5. And you've got the dollar's up about 8 cents, and the euro is down just a little bit. Now let's get to the nitty-gritties, because the nitty-gritty is actually based on one little thing called the volatility index, which has made an island reversal, very negative, smashing under the 9-period exponential moving average, very negative. The day is young. The MACD could deflect lower, very negative. It does that. And stochastic's only at 35%. So all in all, what it's saying is there is internal strength that I noted yesterday, which is one of the reasons why in my opening call, that's the newsletter that goes out to my subscribers every single day, while we are short in a certain sector, we have also gone long. Added to the longs, we did get stopped out of our beautiful position on the SP, on the 300% along the SPY for a very nice profit. But boy, just taken out. I raised the stop. I just don't want to mess around with a nice profit. So we got taken out, and today is soaring. The SPXL right now is at 65.84, up 248, up 3.91. Well, we can't complain. We have a stock that's up 2.5%. We have a couple of other stocks that are doing quite nicely now as well. So, not complaining. In fact, right as of this very second, all our long positions are up, and that's really important. Double check, yes. Okay, now let's go to the nitty-gritty, and we're going to go to the nitty-gritty of Dan in North Reading, Massachusetts. Dan, how are you?
Good. How are you doing?
Very well, thank you.
Yeah, so I don't have a position in this, but I've been watching it for a long time, and it looks like it had a nice little turnaround.
You and me together. This is PAL. This is trading at 0.50, up 5 cents. Up 5 cents sounds like nothing, folks. It happens to be 10.53% on the day. North American Palladium. You know, in my opening call, we've had this periodically, and we've either made a little bit or we've lost a tiny little bit. I always limit the short side potential loss, and yet out of the blue, it's just, this is North American Palladium, PAL. It's trading very nicely, and it made a low of 0.30. Was that 0.30 or 0.31? So it is up huge, and of course percentage-wise. Now, what do you do? This is real easy for me in the sense that the monthly chart is just horrible, but for the very first time in Trough G, it's showing a little bit of a divergence between the positive technicals, slightly positive technicals, and the price going to a lower low. So this is my suggestion, based on the weekly chart, making that very, very strong pattern that looks like, if anyone's looking at my Tiger Technicians Hour chart, you'll see that it went to an A to a B minus, just a leap from the 30s up to the 90s, and then it failed, and it came down very sharply, took out the low, and now it's trying to start a move that has better technicals. So I'm going to suggest that you just nibble here at 0.50. I don't see any reason to do anything more than nibble. And the reason why I say nibble is that what you really want is to see how 0.47 to 0.45 becomes support if in the next 2 days it starts to pull back. A, B, that's a B, 39. So now it starts again. It goes A, but this time it's a C and a D. Yeah, I have a target of 0.53, which is the 200-period exponential moving average, but you get a really nice benefit in a move like that. I would suggest that if you have just a small position, you can start right here at 0.50, but I would add to that position preferably between 0.47 and 0.45. And to tell you the truth, would I put a stop on a stock like this? I'd prefer not to actually place the stop, but in my mind I'd say if it gets to 0.41, I got to be real careful. That's why I'm saying small position, add another little small position. I would not get carried away under any circumstance. Reason being that it has a history of failing at A or B, and you would love the weekly chart to go to a B, but I think that it's turned the corner. And therefore, I'm prepared to start a position right here at 0.50, and I would add between 0.47 to 0.45-ish, and I would have a mental stop. I don't know if I'd actually put the stop in because, yeah, it's heavily traded, 9 million shares already today, but so low price, they can easily wiggle it around and take you out. So my suggestion is nibble, add a little bit, and at the moment, whether or not you get your second position is going to be important. But if it breaks above 0.52, then the candle, the inverted Roman candle of the 30th of January with a high of 0.58, that becomes your target. If at any point it goes to 0.55, then there's a good chance it's going to go towards the top of that range. So I hope that helps you.
Yeah, Basil, one question for you. On the that 226 candle, do you not count that as like a phantom B or anything? Or
it's exactly the same, 0.39. So I don't do anything. A parallel high is a parallel high. And if I was to get too carried away and start adding phantom peaks like that, very, very once in a while, I'll look at the chart and I'll say, wow, that was at 105.63, and now if it was only 105.64, I could have counted it as peak B. Therefore, I'm really at peak D. I'll, in my mind, do that. It's a phantom theory because there's no basis for it all other than my eye, but it at least helps me to say that I possibly could be at a D when it's actually peak C, but that's the only time I would do it. I would not count it here. There's no necessity for it. I would have counted it if underneath there was a little A, then that would have been B and this would have been C. So, no, we're in leg B. Hope that helps you, Dan.
Okay, thanks, Basil.
Thank you. Good luck. Dan North Reading will be back with Lou in Connecticut straight after this. Dow's up 206, S&P's up 25.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We are back. Dow's up 209, S&P's up 25, and we're going to go to Lou in Connecticut. Hi, Lou. How are you?
You sound terrific, Basil.
Thank you.
You're amazing. Hey, listen. I'm going back to the root, and I see the NDX, I believe, made a peak D, and does that change anything because you were looking at the Qs?
Okay, let me just go through this. Now, it depends on what format one has and how you're getting the data. My data has the Qs, both the Qs on the 26th of February at 90.40. What did I say it was? 90 I wrote it in here.
Check the date on the 26th.
The 26th.
I think it made a little bit of a high above the B.
Yeah, I've got 90.47, and that was 2 cents above the B. But then what happens is the following day it made a higher high at 90.53, and then the next day was 90.96. So I have to call that a floating letter C until it makes peak C from yesterday. And today, the Qs are at 90.91 high, and that's 7 cents off making leg D. Now, if I go to the NDX 100, which, of course, NDX 100 is, in fact, the root, the core of the Qs, the Qs itself, that's the top 100 stocks. I have exactly the same thing. I have on the 26th, 3702.09, and then the next day is 3704.65, and then you get peak C at 3722.38. Now, some people, they have a slightly higher high on the 26th and the 27th. That would make peak C, and that would make this D. Now, what I've found out over the many, many years that I've done this is that I don't know why, I don't know why it should even mathematically work out, but invariably, if there's some incorrect data for some reason, and once again, I'm not the mathematician, I'm not the scientist, I don't know why, but invariably it works out that the other data will give a peak, just as I got a peak, but it might be a different letter. That's number one. And number two is that although it's a different letter, it in fact turns out to be a top as well. So all I can say is that you might, for those of you who have that data, you will have D and you will have E the moment we cross to a new recovery high. And yet in the end, when the sell signal comes, we'll all be at D or higher. And that's really the big issue, is to be at D or higher to be able to get that sell signal. So I hope that clears up something.
Where does it go from here?
Well, if you look at the IWM, and I didn't mention this before, I was going to, and then I got distracted, and then thank goodness I was reminded in the den to look at the IWM, which is exactly what I wanted to do. The breakout today from the low of yesterday at 115.58 is trading at 120.13. That is just 120.27 is the high of the day. I've got an instant restart in my weekly chart that says this is probably leg D. It's broken out of the trend line in the monthly chart, and I don't have a signal as of now to say that in the next day or two I'm about to get a sell signal, which would say right at this very moment you could start implementing some shorts, which is normally what I'd be doing in leg D or E in the Dow, or what I'd be doing in leg D or E in the S&P. I'm holding off. I might even have to wait until the end of the day before I get any clues whatsoever. But I'm suspecting that the 5 to 7% sell-off we had earlier, depending on which index you're looking at earlier in the year, and then yesterday's very sharp 1.5%, almost 2% correction might in fact have negated a lot of the negativity, and we could go a little higher. We might even recycle. I don't know, and a lot is going to depend on one of the sectors that I'm looking at. If it starts to break out again, I'm just going to have to say, you know what? This is the ever-ready bunny. It just keeps going to all-time highs. And the VIX, if the VIX continues to remain very low, I don't want to get in front of the freight train by going short too soon. If you're looking at the weekly chart of the volatility index, this is not unlike what we've seen before in the volatility index weekly chart, when it's come down from a major top in the 21s, and it has some reflex bounce at some point, and then it comes down. Now, I'm also going to add that with Putin, whoops, I hear a break coming up. With Putin, there's a really good chance that the party's not over, that he's got other things up his sleeve. So, hey, Lou, you want to hold on a sec while I take a break, and I'll be back with this thought?
Thank you.
Okay, I'll be back with Lou in Connecticut straight after this. The Dow's up 206, S&P's up 25. S&P's now lagging just a little bit on the Dow. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 198. S&P's up 23, 24. And we're on with Lou in Connecticut. And I've been talking about the NDX, the letter name that I have. It could be slightly different with some trading platforms. But the data I get from TradeStation, I over the years, I've just found that it's impeccable. It is really top-notch, because when anything gets smoothed out, eventually it goes to whatever the data was saying in the TradeStation platform. That's just what I found. Now, I don't obviously check every single bit of data, but this is what I found with incorrect or data.
Close enough, right,
two or
Basil?
three different sources. What?
It's close enough.
Yeah, well, you know, when you're talking peaks, you want to be exact. So in this particular instance, I just wanted to clarify. Now, Lou, if I look at the gold seems to me, having held the 9-period moving average this morning, hasn't gotten there yet at 1330. It's trading right now at 1337. The low is so far 1331.90. But I've got a potential peak E. So I've now got, and this is going to be really interesting, because gold and the general market have just lately have gone quite a lot together. If in this case gold is going to pull back, I would suspect that we'll get a great clue in the next 3 days if gold closes decisively under 1321. I would probably say 1315. A close below 1315, and immediately you got to think, whoa, that 1307.20 low of the 20th of February, that's going to become a very important testing point besides which there's is that the 200 period? I believe that's the 200 period moving average. Simple moving average is right there, which many people look at. Most money managers tend to look at the SMA, the smooth moving average, rather than the EMA. So I'm saying something's going on, and I suspect that gold will be a bit of a clue for us, because if gold really starts to take it on the chin, there's a chance that the Dow will then, the general market will start to pull back. We are at a point right now in the market where, let me just go to this front page here that I show subscribers every day, where the Dow has not made a new recovery high above 16,398 for leg E. So the Dow is lagging. And what my suspicion was, and I've spoken about this now for quite a while, I've said there's a chance that the Dow is going to get to its leg D and then peak D earlier than the S&P and the Qs, based on my work. And there's another chance that this particular move is going to see the Dow possibly not make it above 16,588 if those other indexes, and now I'm going to include the New York Stock Exchange, NYA.X, that is at a new recovery high. In fact, it's not at a new recovery high at all. It is at an all-time high. 10,387 was the previous high, and today it's gone to 10,477. Now, there's a rule of thumb that was brought to my attention, but it's something that I remember years ago reading, and then I found it in my own work. When major tops have been exceeded, in other words, if there's a whole series of tops, let me just grab this S&P. I know you'll love to look at this and talk about it. If I go to the S&P monthly chart, I'm going to try to grab, yep, there it is. That monthly chart that has the very long term, this is the one that can go back all the way to, why am I having trouble there? There, okay. That's the one. This is the monthly chart that goes back to 1980, well, I don't know where, 1980 something. So 1990, basically it starts. And it shows how many times it's gone to a peak D. It also shows how many times it's gone to a peak C. It also shows in that pink, if you can see it in Tiger TV, the pink resistance from 1557 back in 2000, March of 2000, to the October 2008 1576 high, just fractionally higher. Sharp pullback down to the 768 level in the first case, 666 in the second case, March of 2009. And in fact, March the 5th, what's today? Today's the 4th. 5th, 6th, 7th. Is today the day? Yeah, March the 3rd. Oh, I think this is the anniversary of the buy the signal that I had in the Dow Diamonds back in March of 2009. Anyway, so once you pierce very, very powerful resistance points decisively, and in this case, there's no question that 1576 to where we are right now, 1869, that's pretty decisive. That says that, in fact, you've got to consider that it's open skies above, and that you don't really, unless you're using Fibonacci expansions and all other techniques, or you use trend lines, you don't have a number on the left side that you can say, oh, there's 1557, oh, there's 1576. This is open territory. And that means that the upside makes it very difficult, if you're not using other techniques, to actually pinpoint a number. But I'm looking at this as if this is still leg 3 or wave 3 in Elliott wave. And if that's the case, we still have to get wave 4, which could be pretty severe, and then 5 will be an extraordinary move to the upside. That's the back of my mind. When people send me a note saying, okay, is this the time? Is this it? Is this the top? I don't have a sign yet of a major, major top. I don't want to get into the politics of things, but my suspicion...
Okay. Basil.
Yes.
Could you check out My Horseman, Microsoft, and the banking index for clues?
Okay. Oh, thanks for bringing up the XLF, because the XLF, here again, the XLF is one of those indexes. First of all, Microsoft is in leg F with a doji candle. The stochastics at 78%. The MACD is just starting to turn down, but it's still good. The weekly chart is paralleling the move up, which has not gone to the all-time, well, to the high that we saw at 38.98 back in December, the week of the 6th of December of last year. And the monthly chart has made a peak E, but the price is hanging very nicely close towards that high, with the wick of the candle of December saying, hey, the moment we start to get into 38.57, there's a good chance we're going to retest the 38.98 high. Now, so as far as Microsoft is concerned, I don't have a signal other than to say I'm going to watch this real closely. It could recycle. This could be F/B. So I'm watching it very, very carefully together with many other things. But now let's just go to the XLF, because here you've got leg D. And in fact, today you've got leg E. So on a purely technical basis in the Chapman wave, normally this is exactly where I would be starting to put on short positions. So all I've done is I've got short positions in a different sector. I haven't got it in I haven't done anything yet in the actual indices. Now, I'll explain one of the reasons why. The XLF weekly chart is not very good looking at all. But the monthly chart with the 200-period moving average at 22.23 is looking really nice. And the daily chart, although it's a pathetic move, it's one of the most, I'd have to put into the category of one of the many moves that it's had to a D that is not, it cannot sustain. It gets to a D from the 7th of November at 20.38. The XLF, which is the S&P Select's Financial Spider Fund, went from 20.38 all the way to 21.64. That's not even, was 6% or something. It pulls back and it goes to 21 round number low on the 18th of December, and then goes all the way to 22.16 peak E on the 15th of January. Not a big move. That's 10%. Then it plunges. It actually plunges. Why? Because it gives back all of that 10% plus. It goes to 20.50, and now it's gone to leg D and then E, and it's gone from 20.50 to 21.86. Each one of these on a percentage basis for an index that should in fact be a leader is, I'd have to say, it goes into the pathetic category. But it is acting well today. And I'm suspicious of moves that go very quickly from an A to a B to a C to a D to an E, because they can pull back. But that's not a signal for a serious sell signal. That's usually a pullback, but not an indication of a serious sell signal.
How is your horseman doing?
Now, yeah, and that's a very good. So in other words, the XLF is not a leading indicator right now, but it's doing okay. Nothing great. So now let's go to GE. GE, well, Immelt has gone to, I don't know how many million shares of GE is bought. Nice sign. It's holding the weekly chart up channel and inside track support, and it's trying to touch the 9-period moving average of 25.70. But I have to tell you, unless GE can smash through 26.04, the high of the 18th of February, I'm very suspicious of this move, because I think it needs more digesting to do, maybe make the H pattern that goes to an M, and then perhaps in June it starts to break out. I don't know yet. I'm watching it real close. IBM had a very nice move. It's in leg E above the 200-period moving average right now. But the weekly chart is not great at all. So the weekly chart is saying, nice move, but you have no choice but to consider that until IBM closes in the weekly chart above 190.81, the high of the week of the 17th, in fact, it really needs to get to 192. And then all of a sudden, that pattern is going to be very positive in the weekly chart and will help the monthly. If IBM in the next week or two suddenly just takes a dive and goes under 182, that'll be very negative. So right now, IBM is okay, but not great. It's not really leading at all. Triple M was a leader. Now it's gone to an A, B, C, D. It went to a peak D, and it's kind of lagging. They're all lagging. They're not really near the highs in terms of where the S&P is and the Qs. They are lagging like the Dow. So Triple M right now is just in a retracement mode. I don't have a signal on it other than to say it's acting quite poorly after being such a spectacular winner since late 2011. So now you get the final one, which is UTX, which was doing very well. It's gone to leg E. It, in fact, is 118.20 was its all-time high, and today's high is 118.17. So it is acting very well, and in a sense is saying, I'm giving you confidence to say that you can keep watching me. My stochastic's at 86%. My MACD's very good. The weekly chart is not very, it's not very constructive as it stands. So UTX is absolutely in the next 3-4 days going to be one of my bellwethers, as it always is. And all I can say is, if UTX is able to get to the 120 level in the next week, I have to respect it as being a leader and saying there's a rotational correction that's been going on, and it's now much more selective than it's ever been to the upside. I'm very suspicious of this move to the upside, but I don't want to step in front of the freight train unless I, in fact, am sitting there holding on to the light. So I've got my
terrific,
parameters.
Basil, just terrific. Thank you so much.
Thank you so much for calling, and let me go through those. So as I said, I've got my parameters real clear. If the Dow at any point starts to take out 16,000, I've said that for quite a while, a close below 16,000 says, be careful, there's a timeout going on. In points, it says the Dow could even go back to 50,500. If, in fact, there's a breakout, and I've said it quite a number of times, into the 16,650s, I have to respect it, and I suspect UTX will be participating. Right now, we're in the middle of everything. I'm quite prepared to go short. I'm quite prepared to hold the long positions. I am, right now, as flexible as I could be. Thanks so much for calling, Lou. So I'm going to do this. We've got some remaining time now. I had a couple of questions that I'd like to deal with. Let me just quickly double-check. I want to swing over to my emails. Okay, there was a question that I had. I'm going to try to recollect the exact language. It was put very well. But before I do that, since Friday, I've been meaning to say, I haven't looked down at my page to see, in big, bold red letters, it says, death of a salesman. Now, I don't often talk about too many things around the Boston area unless I really think they're fabulous and I could recommend them. Well, the Lyric Theater is doing a play right now, Death of a Salesman by Arthur Miller, two different people, Arthur Miller, and it is absolutely extraordinarily well done. I was loathing going. I just didn't feel like being depressed. It is a depressing play, but actually it's not depressing if you think of the guy correctly and not the way it's portrayed. I think there's a deeper meaning to it, and it's a medical meaning. But as far as the play is concerned, it is superbly acted. Absolutely. Paula Plum, I mean, she's good. And what's his name go on, someone in the den, you know the guy. What's his name? Loman, Willie Loman. Anyway. It's really worth it. So let's go to William in Singapore. William, how are you?
Hi. Oh, great. I'm great. Thank you very much. My apology about what happened yesterday due to some technical,
Yeah, I understand that technical stuff, it happens. What can I say?
Yes.
So, you wanted to look at?
I'd like to ask you regarding, Apple's, AAPL based on your Chapman wave.
Yes, I like Apple right now. I think it's going to go a little bit higher. Then it's going to bump into a lot of resistance. Are you able to hold on, William?
Sure, no problem.
Great. William in Singapore, we're looking at Apple and Tesla. We'll be right back. The Dow's up 198, S&P's up 24. Be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An Investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. We're on with William in Singapore. We're looking at Apple, we're looking at Tesla. So let me just do this quickly. In terms of the Apple, do you still have calls on Apple?
In fact, I closed it when it went down. So I just initiated the call option today.
Okay. What you want to see in the call option, because the 200-period moving average at 531, around about 531, where we are right now, 531, somewhere around 531.80, 60, sorry. You want to see Apple by I'd say by 2:30 this afternoon at the latest. You want to see Apple above 532.75. It's not a big deal. It's $1.25 away. Oh, let's make it about 3 o'clock, a little later this afternoon. If it does that, that'll be peak C, leg C, and then all of a sudden your target would be 537. That's really nice. But, no, let me do one at a time. 534.57 will be the first target. If it takes that out, then 537 will be next. But if it starts to fail, my only concern about this is that if Apple starts to fail, and at any point in the next, this afternoon or tomorrow morning, it takes out 528. That will be pretty much the move for Apple, I think, in this particular move, because it's going to It's got the momentum right now and needs to follow through. And if it can't follow through in a day like this, it's only up 371, up 0.71%. It should be up more. This is the hour. So I'm saying the next hour and a half is what you want to see. If you start to see it slide a little bit down to the 530 area, I take some profit. I wouldn't hold the call position. You can always get it back into it, but you don't want to be stuck in the call position. And real quickly before we break for the day, sure. Tesla needs to break above 265. That's the thing I've been watching all the time. That'll go to leg D. It's still very important, but Tesla as well needs to, by this afternoon, must break above 260. It's at 256. It should even get to 258. I don't like the way it's stuck here. It needs to move higher, but if Tesla breaks under 252, be very careful on the short term. Those are the parameters to watch. Hope it helps you, William.
Okay, thank you very much, Mr. Chapman.
Thank you very much. Always appreciate your call. Folks, before we break now, we've got the options hour coming up. Should be a wonderful hour. And as always, I'm just going to give you my parameters. The Dow is this triangle. It broke under it. Now it's back in the triangle. The resistance, I want to move the resistance just a little bit. The resistance will be on the Dow around about 16,390 to 16,430. It's at 16,374. Number one, if by the end of the day there's a sudden failure, I'd be very nervous about that failure if tomorrow that continues with a double-digit down by 10 a.m. But in fact, if there's a close near the high of the day and tomorrow opens quite strongly, I'd say you've got to step aside a little bit. You've got to give it some room. You might even have to wait for a peak to form in the S&P before you can actually initiate shorts with comfort. But this is the period where I would be looking at shorts normally, but I'm looking at some stocks that are doing so well that I'm saying I don't know how to make it some kind of conciliation in my mind how some stocks are acting well and some stocks are acting so poorly. How can the Dow be up 205 when you've got such little leadership in my Dow quartet? I mean, they're moving, but they aren't really leading per se. They aren't at new highs. So as I'm looking at this, I'm saying don't fight the tape, number one. Number two, if you're going to go short, you can only start very small. And there will be surprises to the downside at some point with Putin. There will be surprises to the downside. I don't want to think of the market derailing a move right now because of emotion. It's got to be technical, and we've got almost everything in place. I'm waiting for leg D in all these indices that I'm talking about. When I get that, maybe tomorrow, we'll start looking at the other side of the coin. So, hope that helps you. And watch the volatility index. Volatility index at 14.22. That's buying pressure. Volatility moves up to 1570, 1630. Selling pressure. Keep it simple. And I'll be back with Tom this afternoon. Have a great day, and I'll speak to you later.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.